I strongly, wholeheartedly believe that the energy sector stocks right now is the single greatest opportunity available to you and myself in 2020. And by the end of this video, you'll understand exactly why the energy stocks took such a beating a few months ago, how supply and demand has created this incredible opportunity for us to capitalize on. I will show you the 4 major oil stocks that I have on my watch list. We will compare all their financials and put them side by side, and you will have all the facts you need to make an intelligent investing decision. We are going deep for this one, guys. Stay locked in and let's go. What's going on, guys? My name is Emmanuel and welcome to my channel. And I want to say happy Father's Day to all the fathers out there. My missus spoiled me with an investing book that I was planning on getting. I was also spoiled by my nieces. They got me a nice Father's Day treat. So that will go down well. So I love you guys if you are watching. Guys, this is going to be a lengthy video. So to help you out, I've included timestamps in the description below. I'd like to get started by describing 2 major laws of supply and demand. The first law states, if demand decreases and supply remains unchanged, then it leads to lower prices. And this is exactly what occurred back in April when oil prices dropped below zero. I remember filling up my car for less than 99p a litre. You pretty much had all the global economies in complete lockdown. Global destination countries all shut off their borders and had various travel restrictions in place. People were not allowed to travel. They were not allowed to leave their homes to go to work. And you know, it's a bit mad. I'm talking as if this happened decades ago. Guys, this was only 2 months ago. The demand for oil not only decreased, it pretty much was wiped out within a matter of weeks. Here's the problem. Oil producing countries couldn't reach an agreement to reduce the supply of oil. Saudi Arabia even took it a step further by increasing their oil production, simply because they can produce it much cheaper than other countries. But eventually they all reached an agreement, including Saudi Arabia, to reduce the production of oil. However, you still had all this excess oil available that wasn't being used. All of this supply with zero demand. And this led to oil prices plummeting. Energy stocks collapsed, their earnings took a massive drop, and so did their share price. I mean, between the 4th quarter of last year and the 1st quarter of this year, a total of 16 energy companies all filed for bankruptcy. All because the supply exceeded the demand. Now, the second law states, if demand increases and supply remains unchanged or doesn't keep up with the demand, then it leads to higher prices. And therein lies the massive opportunity that we find ourselves right now, this very moment. According to the Energy Information Administration, or EIA for short, this week's report stated that oil prices increased by 60% from April to May this year, which is the largest monthly percentage increase since May 1987. And the report goes on to say that there has been stronger than expected consumption. As countries begin to loosen their restrictions, people started going back to work much faster than initially first thought. They also stated that petroleum consumption in May appeared to increase compared with April level. Now, this is the meat on the bone, guys. This is the juicy part. The report also mentions that the global crude oil production is declining because of voluntary production costs that was agreed just a month ago. So in other words, all of these countries that agreed to cut production or cut the supply back in April are now struggling to restart production quick enough to meet the massive increase in demand. And this graph from the EIA actually paints a much better picture. As you can see from the graph, the world oil consumption plummeted faster than the oil production. And now for Q2, the world oil consumption has risen and overtaken the world oil production. The demand has officially exceeded supply, and according to the law of supply and demand, this will lead to higher prices. And you may have already started to notice the price of your fuel has shot back up in recent weeks. Also, guys, major energy stocks have started to see their share price go back up, but they have yet to return to their pre-pandemic highs. And that's because there's still fear amongst investors regarding a potential second wave or another global lockdown. And you can actually justify this, to be fair. There still isn't a vaccine. Without a vaccine, there will always be fear. But to quote Warren Buffett, he says, be fearful when others are greedy and be greedy where others are fearful. And that's exactly what we're going to do. I hope that all made sense, guys. And if not, rewind and listen again. And if you still have any further questions, please just drop it in the comments below. I'll be happy to help you out. So with all that said, guys, I'm going to hop onto my laptop now and let's see which of these 4 companies has the best balance sheet and which one will I be investing in.
So the key points for this analysis really is the balance sheet. Okay, we're going to be looking at the balance sheets of all 4 of these stocks. They're absolutely essential, and for me it's pretty much a game changer, and it's a difference between whether I decide to invest or if I decide to pass on a company, because I mean it can be literally can be the difference between a stock surviving a potential second wave or a stock going into bankruptcy. Okay, so with that said, we're going to pay close attention to each stock's current assets versus their current liabilities. So these stocks are not currently making a profit and will be solely reliant on their cash reserves and their current assets for the next 12 months. So if they've got more current liabilities or financial obligations that's due within the next 12 months than they have with assets, most likely these companies are going to need to raise some cash somehow. Most commonplace at the moment is going for the government for a bailout. If they don't get a bailout, then they're going to have to take out more debts. All right, so a current ratio above 1 suggests that the stock is financially healthy, while a current ratio below 1 suggests that the stock is more financially risky. Alright guys, so with that said, here are the 4 companies that we'll be looking at today. We have ExxonMobil, ticker symbol XOM. We have Chevron, ticker symbol CVX. Total, ticker symbol TOT. And we have Philips, which is ticker symbol PSX. Alright guys, and looking at their share prices, as you can see here, Total is actually the cheapest at $39, followed by ExxonMobil, which is trading at $45. Then you have Philips, which is at $74, and you have Chevron, which is trading at $90. So Chevron's the most expensive out of all the 4 stocks. And if you look at their changes, so this is the changes from their 52-week highs, and as you can see, Exxon's currently taken at the moment it's 40% off its 52 weeks highs. Chevron's recovered quite well; it's only 28% of its 52 weeks highs. Total as well is close in. Total as well is following close by to Chevron at 30% off its 52 weeks high, and Philips as well is at 37% off its 52 weeks high. So looking at this, you can see ExxonMobil and Philips actually still have a way to go before they hit their 52-week high. So in terms of profitability, if they both return back to their 52 weeks high, there's a lot of profit in ExxonMobil and Philips than there is in Total and Chevron. Okay, so moving on to the book value per share, guys, and if you watched my last airline video, I mentioned that the book value per share pretty much is the total shareholder equity divided by the total share outstanding. And you know, a lot of investors and pretty much the general consensus for the book value per share is that a stock is considered undervalued if the book value per share figure is higher than the share price. Okay, and the closer the stock price is to the book value per share, the more undervalued the stock is regarded. But it's not a deciding factor for me, if I'm being honest. I would rather go with what Peter Lynch preaches for determining whether a stock is undervalued, and I've actually done a video explaining that, so we'll put the suggested icon above. And as you can see here, guys, the only stock that's trading below its book value at the moment is Total. You've got a book value of 43 and the share price is 39. So if you are one of those investors that takes into consideration the book value per share, you've got Total here that's considered undervalued. Okay, guys, and now moving on to the income statement. Now you have to remember, before we proceed, all these numbers are in thousands. So you've got 249 million, but you have to times it by 1,000, which makes it 249 billion. And we're going to be looking at their revenue, net income, their operating margins, and their PE ratios. Okay, guys. Okay, guys. So with their total revenue, so pretty much the revenue is the total amount of money the business generated before expenses, and that's within the last trailing 12 months. So as you can see here, I mean, it's by night and day, ExxonMobil has actually generated the most amount of money at 249 billion, closely followed by Total, 169 billion, Chevron comes in third place at 135 billion, and you got Philips, which is 105 billion. All right. So with that said, we go to the net income, and the net income is pretty much the earnings that's made after paying taxes. Okay, so after they've deducted tax expenses, you're left with the net income. So for the trailing 12 months, you've got Exxon out in front with 11 billion total net income, closely followed again by Total at 8 billion, and then you've got Chevron at 3 billion, and you've got PSX right here trailing way below at 376 million. Okay, so the operating margin, guys, as you can see here, is at 3.48 for Exxon. It's at 7.25 for Chevron. Total, the operating margin is 7.94, and for PSX, the operating margin is at 3.46. So of the operating margins, guys, you can see here Total has the best operating margin, sitting at 7.94. So looking at the PE ratio, guys, and straight off the bat, PSX has a huge PE ratio sitting at 90, closely followed by Chevron, which is at 44, and you've got ExxonMobil and Total with respectable, much better PE ratios considering the times we're in. So I think PSX at a PE ratio of 90 is trading really, really expensive right now, and also Chevron at 44. They're trading really, really expensive. Okay, guys, so moving on to the balance sheet, which is the interesting part. You've got the total current assets listed here, and the current assets is pretty much the cash or assets that's available to a company within the next 12 months. So you've got ExxonMobil with 50 billion, you have Chevron with 28 billion, and Total way out in front with 78 billion in current assets, and PSX again is sitting at 11.7 billion in current assets. Now looking at their liabilities, and their current liabilities are pretty much their financial obligations that needs to be fulfilled within the next 12 months. So you've got ExxonMobil 64 billion, you've got Chevron at 28.2 billion, you've got Total that has 66 billion, and you've also got PSX at 10 billion. So pretty much the current ratio is when you divide the current assets by the current liabilities, that will give you the current ratio. And as we said at the beginning, the current ratio above 1 is generally an indicator for the financial health of the company. All right, so ExxonMobil isn't looking too good at 0.78. Chevron is just above the 1 of the current ratio at 1.01. The best current ratio out of the bunch is Total at 1.17, and you've got PSX, which isn't too bad, at 1.11 in the current ratios. So now moving on to their total cash position, and you've got Exxon with 11.4 billion, Chevron has 8.5 billion, Total has a really great amount of cash reserves at 28.6 billion, and you've got PSX with 1.2 billion. Now, in terms of their total long-term debts, Exxon has 31 billion, Chevron has 23.6 billion, Total has 48.8 billion, and PSX has 10.7 billion. And their cash to long-term debt, guys, pretty much all of them are over leveraged at the moment. And that's not surprising considering the current global lockdowns that they've all been through, and which they're all now coming out. All of them have taken out some type of debt, and they're all pretty much over leveraged. Okay, so there's no winner here. And also looking at their total assets versus the total liabilities, you can see here ExxonMobil has quite a lot of total assets at 355 billion, closely followed by Total at 263 billion. Then in third place you have Chevron at 236 billion, and PSX is way down at 53 billion. Now total liabilities, you have ExxonMobil 167 billion, closely followed again by Total at 148 billion. Then in third place you have Chevron at 91 billion, and PSX is at 29 billion. And moving on to their stockholder equity, guys, and the stockholder equity, especially an increase in stockholder equity, is an indicator that the total assets are increasing much faster than the total liabilities. In order to get the full history, you would need to go onto Yahoo Finance or Seeking Alpha to look at the total stockholder equity, but I've done the research for you. Of the 4 companies, ExxonMobil and Total have seen an increase in the stockholder equity year on year, whereas Chevron and PSX has had a fluctuating stockholder equity. So looking at the balance sheet, guys, I really like Total. They have a solid current ratio at 1.17. They win in that position. Total cash and their total long-term debt position, there's no winner because they're all over leveraged. And in terms of their stockholder equity, I'm going to give it to ExxonMobil and I'm going to give it to Total. But on the balance sheet as an overall, Total definitely has the edge because of the current ratio. So the cash flow statement, guys, is something I've not necessarily emphasized or put much weight onto in my previous comparison videos, and that's because I didn't really have a good understanding of the cash flow statement back then. But now I've been doing a lot of research, a lot of studying, and I feel more competent to be able to go over the cash flow statement of a company. Okay, so the net cash from operations, pretty much, we need this number to be positive, because if it's negative, then it means the business is losing money from its operations. Okay, so as you can see here, they all have positive net cash from operations, and the best actually is ExxonMobil at 27 billion, followed by Chevron at 26 billion. Total follows in third place at 22 billion, and PSX is at 5.5 billion. All right, guys. So now looking at the cash that's been spent on investments. So investments in property, plant, and equipment is what the company spent, pretty much is reinvested back into the company. All right. So ExxonMobil have reinvested 25 billion. Chevron's reinvested 14 billion into their company. You've got Total that's invested 11 billion, and you've also got PSX that is also invested 3 billion. So they've all been reinvesting back into their business. Okay, and also from their previous investments, you've got ExxonMobil. They've actually managed to make some money from previous financing activities at 1.5 billion. Chevron as well made 1.573 billion. Total actually lost money from their financing activity, which is 641 million. And PSX also made some profit at 129 million. All right. So that's why you've seen a reduction in the net cash used for investment because of the profits that's been made. Okay. So in terms of what I've written here, made money from investing activities, all of them are yes, apart from Total. So that's going to deduct Total some points there. So now moving on to debt repayments. Okay, so in the last 12 months, Exxon have had to pay back 1.8 billion in total debts. You've got Chevron paid back a whopping 11 billion in debts. Total have paid 371 million, and you've got PSX that's paid back 722 million in debts. Moving on to the common stock issued, and this is how much shares that the company has offered back onto the market. Okay, so companies tend to do this to raise more money. All right, so the only company that's offered or issued more shares has been Total and PSX, and there was no information that I could find from ExxonMobil and Chevron. Okay, and now moving on to common stock repurchase. So again, this is companies that have bought back their own shares, and again, there's a bit of a hoo-ha about common stock repurchasing. Some people think it's irresponsible of companies, but to be honest, they've all pretty much been busy apart from Chevron. And the most busy company in terms of stock repurchasing has been Total at 2.9 billion, closely followed by PSX at 1.7 billion, and then ExxonMobil repurchased 478 million. So in terms of dividends payouts, you can see here, I mean, it's crazy. 14.8 billion in dividends paid for the past trading 12 months. You've got Chevron minus 9 billion, Total minus 6 billion, and also PSX minus 1.6 billion. So they're pretty much all pay their shareholders dividends. And looking at the dividend yield, you've got Total with an incredible juicy dividend yield of 7.71. And honestly, guys, ExxonMobil's dividend yield is really, really attractive at 7.42. Then you have Chevron at 5.61%, and then you've got PSX at 4.72%. So in terms of dividend yields, the highest dividend yields is Total, which is incredibly attractive. So moving on to the net cash used for financing activities, you've got ExxonMobil at 3.2 billion. Whoa, Chevron have actually lost 14.5 billion from their financing activities. So that obviously includes their dividend payouts and their debt repayments. So that's why it's sitting at 14.5 billion. Total also lost some money from their financing activities at minus 7.7 billion. And PSX as well is at minus 1.9 billion. Okay, guys. Okay, guys, and lastly, moving on to the free cash flow, and this is something I learned quite recently from Phil Town's Rule 1 Investing. It said pretty much that the free cash flow is the total amount of money left over after all expenses, after all operations, after research and development has been paid off. This is the bottom line. So you've got Exxon sitting at a free cash flow of 2.5 billion. You've got Chevron sitting really, really good at 12.6 billion. You've got Total, which has done the best out of all four companies at 12.8 billion, and you've also got PSX at 1.8 billion. So all four companies are doing really well in terms of their free cash flow position, but you've got to give it to Total, okay? So to finalize, I think it's pretty much clear. You can see Total has the best balance sheet. They are trading at the cheapest of all four companies. They also have a really healthy free cash flow position, and they also have the best dividend yield. Total is my stock of choice. I started building my position in Total last week Friday, and if the price does go down, I'll be looking to pick up more shares in Total and then just enjoy some juicy dividend yields. I won't lie, guys, I am looking closely at Exxon Mobil as well. Okay, so if I do pick up some shares in Exxon Mobil, even though the current ratio is below 1, I'm getting drawn like a fly to a flame. You know, that dividend yield of 7% is just too attractive to me. So yeah, but my biggest position in the energy sector will definitely be Total.
Guys, once we hit 1K subs, I'll be doing a full reveal of my dividends portfolio. And guys, we are close to hitting that target. If you haven't yet subscribed but you're enjoying the content, then please hit the subscribe button below. That gets us closer to the 1K mark. And once we do hit that 1K mark, I'm also planning to start a What Stocks Did I Buy This Week series. That's going to be a ton of fun, and I'm really looking forward to bringing that to you every single week. Guys, I also started a Facebook group this week called Generational Wealth Builders. If you want to be part of a community that focuses on building generational wealth, the link is in the description below. We'd love to have you on board. And with that said, guys, smash the like button, hit the subscribe button and notification bell if you haven't already. And I hope you gained a lot of value from this video, guys, and I will see you in the next one. Peace.